Click the bell icon to get latest videos from Ekeeda.
Hello friends, today we'll discuss one question of profit reconciliation statement where we have complete details of financial book as well as cost book, where we are required to first find out the profit and then reconcile it. Let us read the question. Enthusiast Limited commenced business on 1st April 2002. Cost and financial records are maintained for the year ended 31st March 2003. That is, details are given for 1 year. From the following information, prepare statement showing the result as per costing records. That means we are required to prepare a cost sheet. Showing result as per financial record. That means we are required to prepare income statement, profit and loss account. Reconcile these results. That means we are required to prepare profit reconciliation statement. Material consumed. That is the first information. 20,000 kg. This is the information of direct materials. As per costing record, it is rupees 28.50 per kg. As per financial record, actual amount paid, price paid is rupees 26 per kg. Direct wages, direct labor, 3000 man days, working days. As per costing record, we are paying rupees 80 per man day. As per financial record, we are paying rupees 85 per man day. That is the information of direct labor. Factory overheads. As per cost book, 20% of prime cost we are required to take. In financial book, actual amount paid is 3,60,000. Administration overheads. As per costing record, rupees 30 per kg of output produced. As per financial book, rupees 4 lakhs. Selling overheads, rupees 50 per kg of output sold. In case of financial book, amount is given rupees 9,60,000. Stock of output produced as on 31st March 2003. That is a stock which is in hand on 31st March 2003 out of produced stock is 2000 kg. This is the information of closing stock of finished goods. In cost book, at cost of production, in case of financial record, it is taken 1,50,000. Sales 16,000 kg. In case of cost book, 130 per kg. In financial book, 129.5 per kg. Here 16,000 units are sold and closing stock units are 2,000. So we can find out unit produced. Units sold, here it is given 16,000 units plus closing stock, here they have given 2,000. So total units produced here will be 18,000 units. Rent income, it will be recorded only in financial book, 1,20,000. Preliminary expenses written off, this expense will be recorded only in financial book, 30,000. Let us first find out profit as per financial book by preparing profit and loss account. Direct material consumed 20,000 kg. As per financial book, we are paid rupees 26 per kg. It is rupees 5,20,000. Direct wages rupees 85 per man day, and there are 3000 man days. So direct labor 3000 man days multiplied by 85, it will be 2,55,000. Factory overheads rupees 3,60,000 paid. Administration overheads rupees 4 lakhs. Selling overheads rupees 9,60,000. Closing stock 1,50,000. Work in progress 1,62,000. Sales 16,000 kg at the rate of 129.5 per kg. Twenty lakh 72,000. Rent income 1,20,000. Preliminary expenses written off 30,000. So as per financial book, there is loss of 21,000. Now we'll be preparing cost sheet to find out costing profit. Material consumed as per costing record at the rate of 28.50 per kg. Next comes direct labor 3000 man days 80 per man day. So we got prime cost 8,10,000. Factory overheads 20% of prime cost. So we got works cost 9,72,000 per unit, it is rupees 54. Work in progress as per cost book 1,62,000. This will be deducted. So net works cost we got 8,22,000 per unit rupees 45.66. Closing work in progress we have subtracted. To this we are required to add office and administration overheads. Administration overhead as per costing record rupees 30 per kg of output produced. So cost of production we got 13,62,000. From this we are required to deduct closing stock of finished goods. To cost of goods sold, we are required to add selling and distribution overheads. Selling overheads as per costing rupees 50 per kg of output sold. So total cost we got 20 lakh 10,680 and per unit it is 125.66. Sales as per cost book 130 per kg. So there is a profit as per cost book 69,320. Per unit it comes to 4 rupees 34 paise. So our financial book shows loss and cost book is showing profit. Now we are required to prepare working note for construction of profit reconciliation statement. We'll start our profit reconciliation statement as profit as per cost book. So first amount column we are keeping cost book, second financial book, third column will be of difference, which will give us whether to add or subtract that item in profit reconciliation statement. Direct material as per profit and loss account 5,20,000. Direct labor as per profit and loss account 2,55,000. Factory overheads as per profit and loss account 3,60,000. Administration overheads 4 lakhs. Selling overheads 9,60,000. Preliminary expenses written off 30,000. Sales 20,72,000. Closing stock 1,50,000. Rent income 1,20,000. As per cost book, direct materials 5,70,000. Direct labor 2,40,000. Factory overheads 1,62,000. Office overheads 5,40,000. Selling overheads 8 lakhs. Closing stock of finished goods 151,320. Sales 20,80,000. We have considered all the items responsible for difference in profit as per cost book and financial book. From amount in first column, we are going to deduct amount in second column. In case of income, we are required to reverse the sign. Here we are getting plus 8,000. We'll take minus 8,000 plus 1,320 minus 1,320 minus 1,20,000. It will be taken as plus 1,20,000. Now we can proceed to prepare profit reconciliation statement. Profit reconciliation statement will start with profit as per cost book 69,320. Now we are required to add the items. Direct material, it is plus 50,000. Administration overheads plus 1,40,000. Then we have rent income 1,20,000. Now we have to consider items to be deducted. Direct labor 15,000. Factory overheads 1,98,000. Selling overheads 1,60,000. Preliminary expenses written off 30,000. Sales 8,000. Closing stock of finished goods 1,320. So we have added plus items, we got 3,79,320. Negative items we have subtracted. Finally we got 21,000. That is negative figure, loss as per financial book. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.